It looked like really great calls you had on some of these names last year. This year, not so much. It's among the hardest hit parts of the market. Why are you sticking with names like a SoFi or an Affirm, which are just not what investors want right now? No profits, negative free cash flow, and hiccups in growth.
Yes, thanks, Sarah. I think on SoFi, and it's interesting that you say that the market cited like lighter than expected guidance. Actually, they beat Q1. They raised up the guidance on both revenue and EBITDA. The fundamentals are hitting on all cylinders. They're actually probably gaining share from some of the upstarts of the world. So I think what you're seeing today, that's a little bit of the era of pre-releasing, but also I think a lot of the upstart kind of like, sorrows of what, it's dragging it down. I really think that SoFi would have been up. Had they not done this, they would have been up like 10, 15%. This was a Class A quarter for SoFi. But
there are problems. Wait. Dan, there are problems here, right? What if we see a turn in the credit quality for consumers? The postponement from the Biden administration of the student loan payoffs, they're losing on that front. Aren't these big issues?
Those are big issues, but they're actually, the moratorium extension is already in the numbers. What we're seeing here is like an upping of the guidance despite the moratorium. And if you look at their personal loan issuance on a quarter-over-quarter basis, they added like $500 million of personal loans. So they're gaining share. Now, if we get a macro event and things turn south, that's not a SoFi issue. That's a broader issue. But I'm saying specifically for SoFi, this was an amazing quarter, and they're not getting any credit for that. What
about Affirm? You still stick with that stock? Another one that is not profitable
100%.
And is falling in sympathy with Upstart.
100%. So it's the same issue, right? ABS, asset-backed securitization. Those fears are hurting Upstarts. They're hurting SoFi. They're hurting everyone. But Affirm is a market leader in buy now, pay later. And if you look at even the trust data, which we track, which shows you the delinquencies, they've actually gotten better in April versus the last few months. So it's actually trending better. That's going to be a key KPI. I think that people are going to be surprised to see the delinquencies actually come up better than expected, and that should be a big surprise. The Amazon deal that they have is massively accretive, and I think that's going to catch all these bears by surprise. I'm very bullish about Affirm.
Mike Santoli, can you own these stocks? As Dan says, if the fundamentals are good, but there are some real concerns about the consumer lending environment in this country and what's coming?
I mean, both of them, Affirm and SoFi, are now around $5 billion market cap. So they really have been marginalized in terms of, relative to the universe of their competitors. Can you own them? At a price, you can own anything. I think the question is, are they really going to be accruing book value and doing things that financial companies do? You can't own them by thinking that fintech magic makes them something other than a lender. And sometimes a lender to perhaps lower quality borrowers where you're going to have an adverse credit experience at some point over the cycle. In a world where Capital One Financial trades at 6 times forward earnings, I don't know what the world is going to want to pay for these companies if they come to just view them as the lenders that they kind of are at heart.
Well, Dan, that's a question to you. What should you be willing to pay for a SoFi or a Affirm, given some of these concerns and the re-rating of all of tech stocks?
Right, but I agree with Mike, but that's actually a backward-looking thing. I think what we should look for, and this is something we've seen across all of fintech, not just SoFi and Affirm, we're coming off like massively tough comparison. You mentioned that last year was a great year for them. I think once we hit that inflection point, which is coming now in the second quarter, growth will accelerate, and a lot of these worries that are dragging those stocks, they're going to fade. So I think it's pricing in like, I don't know if 08, but it's pricing in like a disastrous environment. It doesn't look like the environment is as bad from a demand perspective. So I think that both those stocks are severely undervalued even today.
You're still 14 on SoFi? Stock is like at $5.
Yeah, 20 times EBITDA.